with Overtime Live, sponsored by JLL. I'm sitting here with the distinguished panel, CrowdfundCRE, the rise of alternative finance in commercial real estate. Hi, everyone. How you doing?
Hey.
All right,
Well,
doing great.
Can we go down the line, and can we just say a quick your name and title?
Sure. My name is Brett Preer, and I'm General Counsel for U.S. Residential Asset Fund.
Hi, everybody. Heather Schwartz, co-founder and chief strategy officer of EarlyShares and Property.com.
Hi, I'm Rich McKinnon with the Grossman Company's Director of Broker Services.
Hi, I'm Jim Freed. I'm Managing Director at the Aztec Group in Miami and Director of Investments for Mayan Properties, our family office.
Hi, I'm Kevin Guy. I am a founder and CEO of Real Liquidity.
Great, thank you, everyone. Let's get going. So, for everyone out there that's not so familiar with crowdfunding, Heather, I'd love for you to do, a quick what is crowdfunding and how it applies to real estate, and maybe even get into you talk about a little bit about your platform and how people can get involved.
Absolutely. So if you look at crowdfunding in itself, it is in its simplest form. It's syndication, only using new technologies and new regulations and being able to syndicate your deals online with new investors. And so what does that mean? So EarlyShares, we have taken these new technologies and regulations and we've created a marketplace, an end-to-end transaction engine where investors can come on our platform and look at new, unique, individual, private placements in commercial real estate opportunities, both on the debt and the equity side, and where quality seasoned sponsors can come on our platform and raise capital from new investors.
That's great. Let's go to the legal side. You mentioned in there, why are we not been able to do this? For the people that are out there, either accredited or non-accredited investors, what has kind of been that regulation that has not allowed people to participate, and why are they allowed to now?
Well, the overarching, just kind of to just give a basic overview, is it's basically a carve-out legislation. Before, there was a ban on general solicitation, which meant that you essentially could not go directly to the public with this. And that is what the law here really does, is it allows that kind of general solicitation, and that's what basically is in turn allowing everyone to participate in this process.
That's fantastic.
Right.
So I want to turn to Jim and Richard. Richard, from the broker side, there's already an established network out there. There may be brokers watching right now. How do brokers get involved? Why would they get involved in crowdfunding versus doing what they always do?
Well, I think one way to look at that is it's a value-added service. It's a value-added approach to a buyer who is having trouble closing a deal, either for funding reasons on the equity side, they don't have enough partners, or on the debt side, they're not able to raise the debts that they needed for the property. Turning to EarlyShares or another portal system will allow them that opportunity. So broker, it's value-added service.
Yeah, I found that a number of my clients have enjoyed and found it to be profitable working on the crowdfunding platform with EarlyShares and platforms like them. It allows them to have a lower cost of capital and better control over their capital stack.
Yeah, and Jim, I want to go back to you. You were great up in the panel, and you made a couple of really interesting points. Piggybacking on the brokerage question. Should brokers be getting involved now? And if they're not, why aren't they? And
yeah, I think that the reason that, first of all, brokers should be involved today. If you're not involved today, you're missing the boat. The inflection point was yesterday, okay? So now that you hopefully got the message that you should at least be looking at this way to raise capital, you should be doing it, because if you refer business to an EarlyShares or one of the other portals, they'll pay you. Just the way you would refer or place a loan with a CMBS lender. This is the Nomura of crowdfunding. Nomura was the original CMBS platform. EarlyShares, I guess you're the market leader right now in market-facing transaction volume. So we'll talk about EarlyShares as being the market leader, the Nomura of this point. If you're not involved and not looking at this, you're missing the boat and you're functionally obsolete.
That's great. And Kevin down there, Real Liquidity. Yes. So you're not a crowdfunding portal. You actually work with crowdfunding portals, and you're providing liquidity for commercial real estate, which is an otherwise illiquid asset, has been historically. So why don't you tell us a little bit more about how you work, what you do, and where you see yourself in the market?
Sure. I mean, right now we're focused, we look at crowdfunding as sort of the nouveau way of looking at syndicates. Syndicates have been around for 10, 20, 30 years. The old way of doing it was, 10 people at the local country club get together, put in $100,000 a piece and buy a piece of property. The new way of doing it is advertising over the internet, where you can access more people faster, and you can create a lot of volume in creating these new syndicates. Where we play in the space is we're providing a second market where if somebody invests in a project, they can actually sell the share at some point in the future. So if it's an equity deal, they need to get out, the kid's going to college, they can actually trade their share on our exchange. So we're providing the liquidity for an otherwise illiquid asset.
And there's nothing out there currently that serves those syndicates and those investors in those syndicates for an efficient way to get out?
There's very little out there as far as liquidity. Right now, as Jim said, we're hitting an inflection point. I mean, we're starting to see more and more deals, and I think it's going to become more of an issue. We're seeing a lot of debt deals out there right now. But the thing is that individual investors, they want to play on the equity side. They want to be able to take advantage of the growth and value of the property. So, right. And that's the space that we're going to play in.
And Jim, let's follow up on that, and then Heather, I have a question for you.
You had talked about the liquidity, the back-end liquidity, and up until now, the only liquidity has been provided by the issuers. People like Inland would perhaps make a club introduction if you wanted to liquefy your share. So that's really been the only liquidity available until the secondary market begins to mature.
And so Heather, I heard debt deal, equity deal on a couple different answers. Can you explain to people out there what's the difference in a debt and equity deal, and those are the types you're going to find on a portal like yours?
Absolutely. So we are capital stack agnostic, meaning that we do host both debt and equity. So just looking at the priority, obviously debt comes first, and from an investor's perspective, your only return is getting that interest rate back on that debt instrument. Looking at it from an equity perspective, there are preferred returns associated with the equity that we have on our platform. So those preferred returns range anywhere from 8 to 10%, and then you also have the ability to participate in the potential upside on a sale or a liquidity event on the property.
Great. Let's talk about where we're at in the market right now. I believe it was 2012, which was the Jobs Act. Somebody want to clarify if I'm wrong, but 2012 and the Jobs Act allowed this to even happen, right? It gave us the regulation to say, yes, we can do this. Where are we at right now? We talked about brokers. Are the developers, owners, is this the new way to raise money? Are banks going to become obsolete and we're going to now go to the crowd for all these projects? Anybody want to take that question and go from there? Richard?
Yeah. We recently were a sponsor on a triple net lease deal that we use crowdfunding on. Traditional debt, we raise debt through a bank, but clearly this opens the window. Will banks be out of business? I doubt that, but I do believe that this gives a sponsor, an owner like ourselves, an opportunity to source other means of our money that we need to buy deals in.
Right. Follow up on that. So, the Fed has kept money very cheap, right? And I think that's made
today.
Okay, we'll take a look at that. But so, inevitably, as the cost of money is going to go up, let's say in the next couple of years, if we think that it's going to go that way, do you think that crowdfunding is going to play even a greater role? Because we can kind of, it'll regulate the market and the crowd can keep those interest rates down, or does it not work that way?
Well, I don't think that it's going to regulate the market down. I think it'll be a supply and demand downward pressure on capital costs. I think that if you look at what crowdfunding is, which is the democratization of real estate investing, and as more and more people are able to access that market, the competition will keep the costs down. That will allow you to average your capital costs down to a level that's lower than it would be if you were going to a true institutional partner who might have a higher cost of capital for you. The most important thing in real estate is access to inexpensive capital.
Right. So for an investor going on to a portal, I might not know anything about real estate. I see on a portal like yours, on EarlyShares, I might be able to get a fantastic return, somewhere 8, 10, 12%. How do I feel comfortable as the investor investing into that asset, right?
Absolutely.
I guess what I'm looking for is transparency and all that, right?
I was just going to say, it's transparency and looking at our technology, we have built a robust end-to-end transaction engine and portal where investors can go in and they can see all of the offering materials, all of the subscription documents, the legal documents, the offering memorandum, everything related with that raise, all in one centralized place that they can go to at their leisure and look at all of the due diligence and get more comfortable with the deal. There are ways that they can connect with the sponsor, have conversations, exchange emails, look and download at webinars from the sponsors pitching the deal. So we have all of that aggregated on our platform to create a very seamless, efficient access point for investors to look at private opportunities.
And what kind of deals, I don't know if you can actually talk about, maybe you can, actual deals, but what kind of deals would you find on a platform? What's going to get people interested?
Oh, I can talk about deals all day long.
Great.
We're in the world
Give
of
me-
general
give me one of 'em.
solicitation. All right, so let me give you two examples. One, because we do both debt and equity. One, we partnered with Guggenheim and Pillar Finance, one of their affiliates, where we're offering a mezzanine loan participation, so investors can go on and buy pieces of that loan that was originated and underwritten and administered by Guggenheim, and that is paying a net rate, net of all expenses, of 9% with a 4.5-year average hold. So very compelling. On the equity side, we have deals for retail, for multifamily, for office that are averaging investors a cash-on-cash return of 8, 9, 10% with potential upside in the mid-teens to mid-20s. So very compelling investment returns.
That's great. I have a question. I think we can conclude the panel unless anybody has anything else. We'll start with Kevin and we'll come all the way back this way. I want you to finish the sentence for me. In 3 years, crowdfunding will
Change the way individuals invest in real estate.
Make traditional analog real estate brokers functionally obsolete.
Stealing from Jim will democratize real estate investment for everybody.
That's fantastic. Okay.
Transform private investing.
And last but not least,
We'll allow an individual investor access to the real estate market like he's never had before.
wow, that's a great ending. Well, thank you so much. Wonderful panel. Thank you very much for the overtime. Thank you, JLL, for sponsoring this, and we'll see you all back for Tech Tools in a little bit. Thank you.